have a record number of people registered for this webinar, so I'm super pumped. I think we're close to 100 already. So while we getting on, I'll go around the room a little bit, ask everyone what they're excited about. So I'll start from myself. I'm super excited today that we have a record number of people registered for this webinar. So thank you guys for the survey and the feedback we gave it last time. So I know what you're looking for to hear from me and from the people I know industry we can share. And second thing, I'm excited that we broke 1,000 people on our newsletter list. So that's exciting this week. 1,000 people. It seemed like we just started and it's already 1,000. So next milestone is going to be 10,000. So that's my excitement this time. I'll go next to Paul. Paul, I'll mute you. I'm going to ask you, what are you excited, brother, about it?
Come on in.
Man, nice to see you, Saul, and congratulations on the newsletter. I could tell you, and I speak for many, that it's probably one of the most impactful. It's got a lot of good. It's very potent, and it's a short read. And the amount of information you get with a short period of time you have to read it is very, very, very valuable for busy people. And so I just want to start off with that. And I'm also excited to see everybody in a couple days in Minnesota. So
Yeah,
Yeah,
I
that'd
missed
be
that
great.
exactly. Yeah. All right.
So you're muted.
Muted. Saul, you got muted.
Yeah.
Very
Let me mute Paul. Oh, okay. Paul, one more time. Hi, Paul. Sorry about that. So what, I cut you off, I think. What are you excited about? Do you have anything else to share?
Oh, apologize. We have some we're working on this deal in Holland and Lansing. Holland's getting some really good activity. We have good things happening there. And like I said, I'm really excited to see everybody in Minnesota in a couple days. So I'm really looking forward to that and seeing everybody. So
Nice.
I
Thank
can't
you.
wait.
Appreciate it. Cool. All right. So one more person. Let's go to Shay. Shay, while we getting on everyone to call, what are you excited about today?
I would say I'm excited about I'm taking down a deal in Northbrook on the 22nd. So it's a small bay industrial deal. So very excited about that. Buying it $46 a foot. So I'm pumped.
There you go. Nice, amazing, good job. All right, so let's go right now in housekeeping rules, really. So we have an hour, and today, guys, you're really for a treat. It really doesn't get better than this in terms of what I can invite here and share this knowledge. So today, Rafik, my partner, my mentor, will be sharing about the creative financing. And I met Rafik about 5 years ago, and at that time, I had a couple of buildings, and the only financing I knew is 75% debt and 25% down payment. And maybe if you have really special relationship, maybe you can go to 80% debt and 20% down payment if DSCR can hold it. And after meeting Rafik, I learned a dozen other ways to finance the deal. And there's so much into that creative financing when you understand how to do it. And every single deal we bought after that, we bought another dozen of deals, and over 1 million square feet. It was every single time was a component on some sort of creative financing, at least in negotiation part, so we can give option to the seller and finding the win-win situation. So Rafik will kind of give the mindset and the strategy overall, the foundation of creative financing. He has 3 great case studies about seller financing. And at the end, we'll go with Q&A, maybe 10 minutes, and then I'll ask to share some takeaways from you guys. And at the end, I'm going to ask to share another survey for us so we can prep for our next webinar a month later, so we can keep improving the quality. So with that, Rafik, the stage is yours. Let's go. Let me unmute. Okay. So I think right now, let me unmute Rafik.
Unmute.
All right. Yep.
Thank you, Saul. Thank you for setting this up. When I got into creative financing, it completely changed my life because I realized that we don't have to conform to a standard paradigm of 25% down. I actually learned about it from many of my mentors. I learned from it from Greg Pinio from Commercial Academy. And so it's absolutely very important for you guys to belong to a mastermind, to a group of people, because it's so great to share ideas and elevate each other. I'm all about that. So in this particular case, in this particular call, I'd like to share some of the ideas, some of the thoughts that I've used, and we bought probably 20% of our portfolio. I don't have statistics, but a lot of our properties we buy with seller financing. And it's interesting, when Sol first posted this thing, somebody on social media posted a comment, and he said, "Scum." And it kind of hurt my feelings, but I got to grow thick skin, right? I was like, why do people think it's a scummy thing to do? They think we're taking advantage of sellers or lying or cheating or whatever. Let me preface it with a statement. Every single seller that I done business with became a mentor, investor, a partner in deals, and we've built an amazing relationship with them. So let's make sure we understand this is real estate is a small industry. You will create a brand very easily. So let's make sure every deal is a down payment on the next one. All right. So there is nothing scummy. The difference between creative financing and fraud is when you creatively conceal certain information from people that are sitting at the table. And that is a seller, title company, lender, or anybody else. What I want you guys to use is concept of radical transparency and say, hey, I would like seller to finance this, Mr. Lender. How can we do it so it doesn't impact my debt service coverage ratio? How do we do it so that it's kosher and legit? And the bankers themselves will appreciate it and will guide you through how to do it correctly. So please make sure you understand and write this down. Nothing is fraudulent here. Everything is creative, amazing, and all you need to do is find a way to add value to your seller, and that's how you're going to win. And with me, in my deals, many of my sellers became investors in my portfolio as a result. So I'm going to go ahead and share a screen here. I created a small presentation going over some of the case studies we've done. Let's see here. And
yeah, we see it.
Okay. I need to figure out how it works. You see it?
Yep.
All right. So okay, slideshow. All right, you see it, everybody? Saul?
Yep. Yeah, I do. Yep.
Creative seller financing strategies. Now, I want you guys to take some notes. There's going to be some very, very interesting, very, very specific terms that I'm going to be using here, and I'll go through it pretty quickly. So, what is seller financing? Very simply, seller financing, guys, is an opportunity for you to involve the seller in some or all of the financing involved with the property. You might say, well, why would sellers even consider investing in the property? And in order for you to answer that question, you need to know that the type of people that will qualify for this, number one, and number two, who would be interested in seller financing to start with. But one thing that you need to remember is that if you ask a stranger to borrow you money, 99% of the time, the answer is no. So don't go asking brokers, hey, is seller financing available? Only in a distressed and the seller is really, really desperate is when they agree to it. So I never ask for seller financing up front. Seller financing is something we request after in due diligence as a way to offer a concession on a certain item of negotiations, you guys. All right, so please keep that in mind. Very important to understand that concept. And then as a result, when seller financing is involved, the buyer repays the seller the principal and the interest. And in my experience, I've never defaulted on a seller financing term. I've always paid back, or I changed the collateral to a different asset in the portfolio when the property was sold. And I will talk to you about it in the next thing in the presentation. So I want you to always look at your seller as an investor for your business. Most of these sellers are seasoned real estate investors. They've been doing this, investing for as long as they've owned the building, obviously. So when you consider that your seller is an investor and you position yourself as a person of integrity, as a person who knows what he's doing, as a person who's done it before and has really good references, your chances of getting the seller to agree to financing increase. All right. And there is a huge benefit to the seller, which I will talk about it here. So the benefits to you: lower or no upfront capital requirements. Many times sellers finance either down payments or 90 to 95% of the purchase price, which makes your down payment very small. Ability to structure deals creatively, right? You can create a situation. I triangulated sometimes between the seller and additional collateral and my private investor. Flexible terms that tailor to your specific needs. Sellers are flexible. When times are tough, they're not going to yank your chain and say, hey, you got to pay me or your notice due. They're very accommodating. They're people, not institutions. Key benefits to the seller, obviously, is tax deferral. Most people, if they've owned the property for 15, 20, or 30 years, they fully depreciated the building, which means if you sell it to you and get all cash, unless they do 1031 exchange, they will pay 20 to 25% of the total proceeds as tax to IRS, or in our case, state of Minnesota. In California, it's 13%. There's state tax involved as well. And so most sellers want to do 1031, but you say, look, why would you want to go 1031 in a new property and pay 5 cap when you can stay in here with me and I will fix it up and I'll pay you 7 to 8%.
Yeah, I just want to emphasize that this is one of the most powerful, probably, key points in negotiation, actually.
Yeah.
You know, sometimes sellers there are not okay to negotiate the price, but when you bring it up, this one, it becomes so much more smoother.
The other thing that sellers get out of this is interest income. You know, instead of getting a lump sum and investing it somewhere, they can get interest. You know, I've had some sellers who said, Rafik, we want to do it for 10 years and we cannot have you pay us off, and we want 5% interest. True story. I bought the property for $800,000, and 10 years later, I sold it to somebody else, but they've received interest for the entire time of my ownership of that property, and they liked it. They get $4,500. It pays their bills. Life is good. Security and familiarity. They know the property already, so the risk with the property is low, hopefully, if you put some money down and you're going to improve it. And familiarity. I mean, they know, and the key is you. You are the only difference. And if you recommend yourself as a person of value, and I'll teach you guys what I did and how you should be able to do it in this presentation. So let's get into some case studies. This particular property is a 20,000 square foot warehouse in Spring Lake Park, Minnesota. I bought this property. Many of you guys who worked with me and my friends know this building because my tofu business was in that building. I bought that building for $900,000. I stumbled upon it. It was off market. I get a phone call from a angry person. He says, tell your tenants not to drive on my driveway. They're ruining my parking lot. And I was like, I'm so sorry. Who are you? He's like, I own the building right next to yours. And I own the building right there, right next to it. I bought it maybe a couple of months before this phone call. And the guy sounded kind of old. And I'm like, oh, who are you again? Now, to me, I've programmed my reticular activation system. Anytime I hear a voice of an older person, I'm like, bang, bang, bang. I want to see if I want to buy his building, right? That's what I programmed. So I said, okay, so you own this building. How long have you owned it for? I've owned this building for 30 years. And what's going on with it now? Oh, I sold my printing business, and the printing company that's been in there is using it to keep junk in it. And it's basically mostly vacant. I said, Jerry, his name is Jerry. I said, Jerry, I would like to meet with you, buy a cup of coffee. I'm your neighbor. You know, let's get together. Let's get to know each other. And we set up a meeting. I bought him lunch. And at that lunch, I basically found out his whole story of his life and his, multiple kids. This property was in a trust for the benefit of his grandkids, who he loved. And he just wanted to pass it on to them. He didn't want to sell the building. Like, I don't want to sell the building. I was like, why don't you want to sell the building? I don't pay tax. I said, okay, what's the tax? He said, well, I fully depreciated it. If I sell it right now for $900,000, I have to pay 30% of it or 25% of it to the IRS and Minnesota State. I said, listen, how about I buy this from you on a contract for deed? I'll give you $50,000 down payment. I don't want to make payments for 3 months. I'll invest, $100,000 or whatever to clean it up and rent it to people. And I'll give you 5% interest. He wasn't getting 5% interest before. Now he's getting 5% interest on his principal. And I said, I'm happy to talk to your lawyer. I'm happy to talk to your, CPA to really break it down and make sure you don't pay the, taxes and whatnot. And he's like, well, talk to my bank because I owe $400,000 on it. I said, don't worry about it. And the bank actually, who was the lender on it, I knew him also, and they allowed us to do it. Long story short, $850,000 contract. I stabilized the building within the first 6 months, I would say. And it was full. It was generating, I think it was 3,500, 4,500, and 6,000. Whatever it is. I mean, it was pretty good. I mean, it made money. It made $3,000-$4,000 a month. I was pretty happy. Well, what's interesting is that I had a substitution of collateral on this particular deal, which was taught to me by Greg Pinio. And 3 years later, when somebody offered me $2 million to buy the building, and my mortgage was, my contract was about $850 with Jerry, I actually called Jerry's lawyer and I said, look, I'm paying it off. I don't want Jerry to pay taxes. How about we transfer this, contract for deed and convert it into a note secured by a junior mortgage on a different property that I had in Minneapolis. And they agreed to it, no problem. And I conveyed the difference between 850 and the 400,000 into a different property. And it was pretty interesting, complex instrument between the CPA and the lawyer. I obviously paid for all the fees. I didn't want Jerry to pay for anything, but it worked really well. And Jerry, I'm not sure if he's still alive, but me and him had a great relationship. Every now and then I'll call him. I'll say, hey, Jerry, I have your check. Can we get together for a cup of coffee? He had another 70,000 square foot building I was thinking of buying, but I ended up not buying that property. But it was a pretty good deal for me. It was obviously a really good deal for him. I think I ended up making $1 million on it, or maybe 950 or something like that. And that's a really good deal. That's a representation. If you're driving around your neighborhood and you see a empty 20 or 30,000 square foot building, you should consider doing the same thing. Contact the owner and see if they would sell. This is a case study number 2, Cliffview Plaza. This is a very interesting deal. Mark Robinson, who I see right here on the call, has been my broker on it, so he won't allow me to, misrepresent the facts. I always tell the truth. But this particular property, $900,000, and it's a 20,000 square foot shopping center. And what's interesting about this property is there was a murder at the property within 6 or 3 months of my buying it. So everybody was scared. Everybody was like saying, Rafik, are you sure you want to buy this? This is a bad area. And I knew it was a one-time incident. Burnsville is not a bad neighborhood in Minneapolis. It's a good suburb. But when I was going to buy this property, I was counting on getting $300,000 from the sale of a different asset, which was pending at the time. Well, that sale has fallen through, and I'm sitting in Las Vegas at Commercial Academy, and I'm like, what the hell am I going to do? I have a closing, $900,000. I was leasing the property. I leased up 3 units. The appraised value came in, stabilized value came in at $1.7 million. So I'm buying it for $900,000. I signed new leases. I got a $1.7 million valuation, and I can't close on it because I don't have $300,000. So somebody on the, I think it was Scott or maybe it was Danny, said, oh, I do seller financing. I immediately jumped out of my seat, went outside and made the phone call in Las Vegas. And I think what they said on stage is, hey, sometimes you should ask seller to finance and they'll be happy to finance it for you because they want to get interest. And I didn't think that seller would consider a second mortgage, and the bank wouldn't allow second mortgage, by the way. So I didn't even consider it to be a possibility. So I called Mark, the seller. So Mark was my broker and Mark Welty was the seller. And I said, Mark, I have good news and bad news. The good news is everything is approved. The loan is done. I've leased 3 units. I'm excited about the property. The bad news is I don't have the money to close on the deal. I'm so sorry. I was wondering if you could spot me for 6 months, Mark. I promise I'll pay you. I cannot give you a mortgage, Mark, but I'll give you a personal note with a personal guarantee. Note with a personal guarantee. Mark's like, you know what, Rafik? You work so hard. You obviously, lease the units. I don't want to stress you out. I'll give you the money for 3 years. To my surprise, it was such a nice guy. It was Ecolab executive. And when he said that, I was like, oh, thank God, I don't have to worry about this 300,000 because it's a lot of money for me back then. So I went to the closing. We bought the property, $300,000 at 5% interest only. Bank was okay with it because my value came in at 1.7. 3 to 5 years later, we ended up selling this property for 2.2 million. And me and my partner made, I don't know, $700,000-800,000 on this deal. So it was a really good deal. It was small, 20,000 square foot shopping center, 2 buildings, 6,000 and 13,000 square feet. What else do I want to add on this particular case study? I repaid seller in full after refinancing within 18 months. He was very grateful. He was very impressed with my deal. He actually lent me money on another fourplex that I purchased on Lake Minnetonka over here. And he always gave me 100% financing. I just said, hey, I need $400,000 to buy this building. Would you lend it to me? And I'll pay you 5%. And he was like, no problem. Boom. And we met at a breakfast place, and it was just so easy to work with. Once you develop a relationship with high net worth individuals, with private investors, you'll be surprised how easy it is for them to trust you with their money. And obviously, don't let them down. Make sure that you pay it in full and whatnot. Lessons learned on this property: be extremely careful of Asian massage parlors. When the Asian massage guy came, and I said, look, are you guys sure it's legit? It's fine. He's like, oh yeah, it's totally fine. No problem at all. Everything's great. And then everybody's like, dude, what the hell is this? These guys are doing hanky panky in there. And I didn't believe it. I didn't want to believe it because I like that $3,000 payment, but it was the truth. And then the cops did a sting operation. They kicked him out. And somebody else came in, and it was, a different Asian massage, but it was a clean one. I don't know. I don't want to be stereotypical, by the way, but in this particular scenario, it was pretty obvious. And I was so gullible. I've never done this before. So I'm like, yeah, sure, no problem. But you got to be careful sometimes. I've also learned by leasing a salon, like a hair salon, that when they rent chairs, stability of the tenant is stronger. And that's when the whole idea of salon suites came about, which we do a lot of in our portfolio now. When we have a suite, we chop it up into a whole bunch of small rooms and rent it out. Really good business for these types of well-located shopping centers. And the reputation of the property is directly tied to the amount of money people reinvest into it. What happens is, if you own a shopping center or industrial property and you don't spend money on roofs, HVAC, exterior, and it looks really bad, all of a sudden you get vacancies and people don't want to go there because it looks shitty. And it's like a downward spiral. Every time we buy a property, first thing we do is fresh coat of paint. We do the asphalt. We want everybody in the community to know that it's under new management. And nothing is better to state that it's under new management if you redo everything on the outside and make it look, make it pop. So very, very important. If you're dealing with value add deals, always redo the exterior of properties so they pop. Okay, I'm doing good on time. So
yeah, we're 6:24. We still have 15 minutes. So
the
let's
first
go.
one was a contract for deed. Second was financing down payment. We do a lot of these types of seller financing and creative financing structures. I run a coaching program online. I do a Zoom call once a week, and I teach young Jedis to do this. If anybody's interested, please inquire. I'd be happy to help. So 1050 Courthouse Road, Inver Grove Heights, Minnesota. This is a very, very interesting deal. This property, 20,000 square foot metal, ugly building, was on the market for $2 million for 6 years, or maybe even longer, 8 years. And we kept kind of running into it and thinking, should we do it or not? But it was so ugly. Asphalt was bad. The property was a mess. And the seller told me he wants $2 million. He doesn't want a penny less. Appraisal of this property was $1.8 million, you guys. He showed me the appraisal. I'm like, Paul, why are you asking $2 million for a property that's worth 1.8? It's like, I don't care. I think it's worth 2 million. I don't care what the appraiser says. This MAGA hat wearing 65-year-old guy became a really good friend and mentor. Every now and then he calls me. We go to lunch. Love the guy. He's a really good old schooler. You know, has done a lot of business. He fixes mechanic shop for trucks. So I bought it for $2 million. I overpaid by a mile, but I sold it for $2.7 million the same day, you guys. How? Well, turns out this building, as an empty building, is probably worth $1.5 million. But it was a building and a business. It was a collision center. It had a whole bunch of equipment. It had people working there, and the old man didn't want to deal with it. To us real estate guys, we never contemplated that it's a business in the building. But the guy that was interested in it, my friend, who's still running the building, he's like, dude, I really want it. And I said, well, what are you willing to pay? And I said, I don't want to overpay. He's like, no, equipment and clients and employees, I think I'm okay with it. But I only have 150 grand down. So I said, all right, you give me 150 grand down, I'll sell it for 2.7 million. We actually, my total profit on this thing is probably 200, maybe 250 grand, not 700,000. There are some reasons for it. I'll explain later. But what I did is I said to my seller, I said, look, if I buy this thing for 2 million, I'm overpaying and banks won't finance it. How about you give me a $900,000 note secured against a different property that I own at very low interest rate. 3.5% is what I ended up negotiating for 10 years. This is 2019, before COVID. And I said, I will overpay, but I don't have to bring any money to the closing because my bank is going to give me the money and you're going to give me the money. My bank actually ended up giving me $1.5 million mortgage on this property. And the 900 grand that Paul gave me as a note on a different property of mine was secured by something else. So it had nothing to do with this transaction. And so that money came back as a down payment for this property. So we actually walked away, me and my brother who did this deal, walked away with about $560,000 at the closing. By the time we got 150 grand from the buyer, $500,000 from difference between 1.1 million that we needed to bring to the table and 1.5 that our lender gave us. And because it was secured by something else, 900,000 was never included in the calculation of the debt service coverage ratio and whatnot. But $900,000 note has a $3,100 payment. Okay, and we pay 9 grand to the first mortgage. So collectively, we have about $12,000 going out the door. But a contract for deed pays us $16,000. So we have actually a $3,200 positive cash flow on this property, and we walked away with some profit. So overall, this was a good transaction, and this is where you triangulate between another asset you have, a buyer, and a seller. So this was a pretty exciting deal, and I would love to, I mean, I can go deeper and talk about this and many other deals where we triangulated this type of a way. And it's all about understanding sellers' motivation. It's all about understanding what other and how to calculate the value of the property and the cash flow and how you can arrive on this thing. I'm not sure if anybody has any questions. I'll keep going.
Yeah.
So, Saul, do you have any questions?
So we can start with Q&A right now, or do you have any to add in this deal or no?
Let me talk about some lessons and insights, and then we'll go Q&A,
Yeah.
okay?
Mm-hmm.
So, I would like to tell you guys what you should do if you want to get seller financing done. Number one, always attempt to meet with sellers at the property tour or after, and always try to take them out to lunch or a cup of coffee or whatever, and sit down and spend some quality time with them. Building a rapport with seller is so important. If you are not going to give that proper respect to the seller, the chance of you getting him to finance your deals is very low. But if they like you, if they feel your energy, and if they feel you're a good guy or good gal, and you're honest, and you're hardworking, and you're trying, trust me, they will be happy to invest with you and build a relationship. Never ask the sellers to finance it up front. That's a big no-no. If you say, oh, I want to do seller financing, you never met with them, the answer is always no. I don't want to do seller financing because I don't know who you are. Why would I lend money to a stranger? So I never ask about it. They sometimes volunteer, and I know they're desperate when they want to sell a finance in the beginning. But most people who want to sell their property want cash. So don't be surprised when the broker and the seller say, oh, no, we're never going to do seller financing. I've heard that before. And trust me, it's not always the case. After you meet with them, after you talk to them, and if you have a rapport and a relationship, the chances of you getting seller financing are much higher. Okay. And you can also use this seller financing as a negotiating tactic. One of the things you can do, which we did like with Paul Seaton, you pay more for the property using private, using the concept of present value calculation, especially if it's 10-year deal at 3%. So consider that. And then treat your sellers like you would a bank. Whenever I talk to sellers, I say, Mr. Seller, you're going to be like a banker. I will send you my personal financial statements. I want you to review it. I want you to make sure you're comfortable with who I am as a borrower. I want you to look at my copy of the credit bureau report, because obviously you want to know what you're dealing with. Here's my copy. And I will give you references of every single person I've bought properties from who are my sellers. Happy to share, and they will talk to you. I've done this very many times, and then my sellers call me, the ones that got interviewed, like, oh, somebody called, I gave you a raving reputation. Thank you for paying me on time, and I hope these guys do a deal with you. So you will build raving fan sellers if you do this long enough and correctly. Okay, cool. And then so brokers, when you tell them seller financing, they think you're not qualified, and they will not take your loan, take your deal. So don't ever tell brokers that you want to do seller financing, because it's considered in the industry as if you're a lame duck buyer, like you can't qualify for it. But seller financing is not necessarily used for financing weaknesses. It's used for juicing your returns. And again, it's got to be a win-win situation for everybody. And then always try to include substitution of collateral in your seller financing terms, because in a seller financing, many times you're not buying the property, but you're buying a financial instrument. And that financial instrument you can redeploy multiple times to buy other properties if you sold the subject property. I have multiple $1 million right now of other people's money, and they're my sellers. And they trusted me, and I keep turning it, and it cost me 5%, maybe 8%. It's not equity, but I always give them PG, personal guarantee, and some kind of a collateral, mostly junior loan collateral on some of my other assets. And that helps a lot with raising capital. So that's basically my presentation. I'm going to stop presenting. And
All right.
yeah, it was quick. 30 minutes.
That was fire, like always. Even after quite a few transactions, I'm still learning a few nuggets from you, man. So I think now let's transition to Q&A. But before I do that, I want you guys also just save the link. Julius will drop it in the comments. That's a feedback survey, like the same thing like did last time. I think there's 7 questions, just so I was prepared for next time. I would like just to keep improving the information that we're bringing. So that's a little plug-in, but let's go to Q&A right now. I think, let me go to the chat right now and just get ready, guys, who has the first question, second question. I see the first question is from Galina. Let me see if she's on, and I'm gonna unmute her. Has to unmute. Let me see right now. I don't know how to unmute that.
Maybe they should put in for questions in the type.
Yeah, so I'll read the question from Galina. I have a few questions. When you finance the down payment with the seller finance, what do you tell to the bank? How do they look at it? Doesn't decrease DSCR. Also, the seller financing is situation when unsecured. When do you collateralize? When you do substitution of collateral, how does it work for the seller with capital gain tax? Can you talk through the mechanics of this? So I think there's 2-part question. So first, the first is with seller finance, how does the bank sees that, and how do you explain it and stuff like that? So I know we went through this, so you wanna
Sure.
put some light on
number
it.
one, when we finance down payment with the seller, you always want to disclose. Do not hide that fact, because if the lender finds out about it after the closing, it's a problem. It's fraud. Some of my friends, some of the people I know went to jail for something like that. Many of you know who that is. I'm not gonna go there. But anyhow, so disclose. Now, sellers can be a note holder, seller can be a mortgagor, and seller can be a pref equity investor. Okay, I explain. Sometimes I'll tell Mr. Seller, hey, Mr. Seller, this property, obviously I'm buying for half the price because of distress, because of some issues. Let me put you in the equity. I've done it many times. Here's my case studies. Here's my sellers. I will actually borrow $300,000 from you, but I'll pay 8% on your money and have a buyback provision for 12 months or 24 months to buy your shares back at profit. And I will bake sellers in as a equity investor. If I put a mortgage, there's two types of bankers. Some bankers like when there is a junior lien behind them, as long as debt service coverage ratio works on a stabilized value. Others don't like it. Bigger banks usually don't like it. Small banks like it. Why? Small banks know if there's a junior lien behind them, the probability of somebody redeeming them is very high. And so they will come in and they will lend you because they know, hey, there's a $300,000 second mortgage, and the second mortgage will make sure that the first one paid in full. Otherwise, they get wiped out. So it's almost like insurance for them to get their money. Sometimes you can borrow a private note, unsecured, like I did with Mark Welty. You still have to disclose for global cash flow purposes, but I've always had like a cash flowing portfolio of houses and real estate. So these, $300,000 at 5% interest only, no payments for 6 months. I always try to do no payments for 3 to 6 months. Why? Because I don't want to carry payments where the property is being stabilized. So if you have any questions, those are the ways I do it. As a substitution of collateral, as long as the seller does not get the cash, when you substitute the collateral, talk to the CPA about it, they will effectively not be responsible for the tax liability. I've done it multiple times, but every time, every CPA is different. So make sure you verify this information with your CPAs. Make sure that CPAs are going to okay, the structure, and what I do always, I say, hey, Mr. Seller, who is your CPA? Let me talk to him. I want to run all of this through him to make sure it's all kosher, clean, and legit, and so, and also a lawyer. I always try to involve a lawyer and the CPA of the sellers to kind of walk through what I'm trying to do. Cool.
All right. Perfect. Let's go to the next quarter. Steve Kiefer, I'm still trying to unmute. Steve, if you're here, can you raise the hand and I'll unmute you?
Good to go.
You have all right, Steve. Yeah, so you want to go with your question?
Sure. Rafik and Saul, thank you very much. It's really helpful. I have two questions. I think you mostly answered the second question. The first is about the salon chairs. Is that actually a business that you're managing, or how do you work that with minimal hassle that you can have that maximize value?
So it's many of my friends bought franchises, Sola Salon, Salons by JC, and they've been making a lot of money. And I watch on the sidelines. I'm like, dude, I got these properties and I could put these salon suites in there, but why am I not doing it? So one of my 10 teammates, Sean, sort of said, let's do this. And so we went ahead and installed one in St. Cloud. Then we bought a building with the salon suites. And then we did one in Edina. And now we're going to do it in Holland. We're going to like in Holland, Michigan with Paul. And every time we have a 3,000 to 10,000 square foot box with a certain demographics, we will go ahead and do the strategy. We also purchased Sola Salon franchise and we learned what they need. The beautiful thing about doing a Sola Salon franchise versus doing your own one-off thing, you can actually sell it to somebody who is in the business and you can get $300,000-$500,000 out of it. So we're, depending on how difficult or easy it's going to be to manage these, I want to ultimately contemplate. So far, I don't really get involved. Sean runs it. He's done a great job. But I think I see that these salon suites are going to be a very big piece of our development of these shopping centers, because once you build it, it's so easy to rent it because it's cheap. And we can always undercut the competition by 20-30%. And as long as we have good management and the property looks nice, then we win over time. People just come and get a cheaper space.
Beautiful. Great strategy. Thanks. The second question, I was asking about pref and if there's any way to use pref that has some kind of debt characteristics. In other words, can you give them a second mortgage or something? It's not really a second mortgage. I'm just trying to see if there's a way to make the capital stack look more attractive, right, with more equity and be transparent with the bank and give the seller some kind of security in something underlying more than just a piece of equity. That's what I'm trying to figure out.
Well, I think you're coming from a position of weakness. You see, sellers should be excited to work with you and trust you. And that's what I do. I'm like, look, I'm not going to take advantage of you. I'll sign a personal guarantee for performance of this note obligation or pref equity obligation. And Saul knows we do this on multiple deals. We would have a seller finance a portion of the equity, and then we have a private individual lend us the balance of the cash, and we document it as a dequity. Dequity is a term that I coined myself, D for debt, equity. And it's basically equity that has the 15% buyout clause. And so I say, look, I'll borrow $1 million from you. I'll give you 30% of the deal, but I'd like to buy my membership units at a 15% to you, simple interest over a year or 2 years, 15% per year. My investors love it because some of them are real estate agnostic. They just want 15%. They don't want nothing to do with the property. But for us, we bought a property for 4.5. We spent $3 million with Saul. It's worth 13. And we still have the investor. We're paying 15% a year, but we put, 500 grand into a deal, and the down payment was supposed to be $2 million. So name of the game for us, and we are, immigrants. We don't have a lot of money, to find a way to hustle and find deals that have high upside, but don't require a lot of down payment. Because, buying commercial real estate, you buy a $3 million deal, you got to come up with $1 million down payment. Who carries $1 million, money in the bank? Not a lot of people.
Yeah, Steve, I want to add another thing to think about it is if you have any other property that has substantial equity, you can put collateral on that property, and bank will be typically fine with that because it doesn't count towards your subject property DSCR.
Thank you, gents. Appreciate it.
Yeah. All right. Who has the third question? Let me see. It was Christian Alavi. Let me try to unmute it. Can you raise your hand and I'll unmute you?
Christian Mohammed Alawi is a friend of mine. I miss him. I don't have his face. Show your face, Christian Mohammed. So how about this? You meet a guy, his name is Christian, and his name is Mohammed. How does it make any sense?
Well, it's like my Persian brother.
Christian, yeah.
My dad, he says, is Persian, and my mom is from South Dakota. So they're like, fuck it, we'll just call them both.
Yeah. With Christian, we just climbed that. We've climbed 2 mountains with Christian. We just came back from Mexico and we did Kilimanjaro. So what's up, buddy? Tell us your question.
Oh, Christian Mohammed Alawi is Christian. Go ahead. Yeah.
Yeah, I was just curious. You guys are amazing. No, thanks for all the nuggets of information. I feel like anything you guys say is like a good nugget for a guy like me. So, much appreciated. Really. Just curious on the contract for deed, when you've got 2 other notes on the property. One, I think it was your case study 3. You've got a bank that's got a note, as well as the one that you had a personal guarantee on, where you substituted the collateral. How did that contract for deed work with having those 2 other notes on there? And maybe just add some color.
The contract for deed in Minnesota is where you sign a contract and you have what's called equitable title to the property. The seller cannot sell it to anybody except for you when they transfer the title upon your basically getting the contract done. Now, every mortgage that you will sign has what's called a due on sale clause. And if the mortgagor finds out that you sold the property, they can effectively call your note and you got to pay it off. 2 things you can do. Either say, Mr. Seller, if the note is called, I will take responsibility and pay it. And hopefully, we're pretty nimble. We do stuff very quickly. Within 6 to 12 months, it's stabilized. And lenders review paperwork annually. So I don't recommend to do it without banker's knowledge. Now, many times I call the lender, and I know a lot of lenders in Minnesota, and I'll say, look, I'm buying this thing. Are you okay with the contract for deed? They will look at me, they'll underwrite me sometimes, and many times it's been okay. Sometimes they would say no, and you have to do some other mechanism to do this, which is another way to sell or finance the property is a master lease with an option to buy. We take over the management, leasing, and whatever, and do this.
Yeah, I want to add Christian to that. So yeah, I think many of in industry who does contract for deed, it's kind of, they do it and they think that lender just will not look at it and it's going to be paid off or sold before there is a due and sale clause. But typically smaller lenders, smaller banks, they're very receptive to that. They may adjust your term to the note to whatever lease you have. So I just recently did, for example, I had a buyer and we had to do contract for deed for him, so technically I wrapped it and financed for them this property. I told my bank about it, and what they did, instead of 5-year term, they shrink my term to 3-year term because my lease was 3-year term, and they were totally okay to do that, but with the bigger banks, probably they won't do it, they don't know how to do it. But with the smaller banks, I typically find it's fine.
Awesome.
Appreciate it. Can I ask one follow-up to that
Yep.
on that same case study?
Yep.
Can you offer the same as you did the substitute for collateral? Do you ever offer that same property? Like, are there multiple folks that have that same property with the collateral securitizing a promissory note?
Explain it one more time. So if you have the property and you have a note and you have substitutional collateral, you're trying to sell the property?
No, when you substituted the collateral to another property that you own, yeah, does that same property have multiple collateralized notes against it, or just the one?
Oh,
When you're
No,
executing-
you can
Just the
have
one.
as many notes on that other property as you want, but of course, you don't want to collateralize more than value of that asset. And another thing, you definitely want to have a permission of the seller that he is okay to substitute. You just can't just take the mortgage and note
Sure.
anywhere. You still have some sort of permission from the seller to put it, and you don't want to put it that the total value of the asset will be above the note value or cumulative amount of notes.
Market value.
so,
I mean,
one of
there
the-
is a way, there is probably another topic where you can call, slice and dice. It's Greg Pino, where when you
By the way, in about
slice
12
the,
minutes,
oh,
there's
all right,
another.
okay.
Greg Pinier is hosting
Yeah, go
his
ahead.
own
Thanks,
webinar,
guys.
if you didn't know
Yep.
about it. So
Go ahead. Thanks, guys.
I want you guys to understand one thing. Sellers always want you to have some skin in the game. Like, who wants to do zero down financing, right? And so what I've done in the past is I would tell the seller, Mr. Seller, I'll put 10% down or 5% down or whatever. And if I didn't have the money and I had everything cooked, I would go to my private capital partner, which there's a lot of private capital partners out there. There's a lot of these private capital partners in this room right here who would say, all right, I'll give you 200. My private capital partner will come in with the cash. I would get the seller to fund the rest of it. And I always triangulate it between the private investor and seller to finance 100% of my down payment. That's how I was able to, buy all these properties. Like my mentor says, I don't know how you do this. You go around town, point fingers at these buildings and buying everything. And many people thought I'm connected to a Russian mafia. And then I was friends with this Mexican guy, and they thought, oh, I'm connected to a cartel. And I was like, no, there's no cartel. There's no mafia. It's just good people doing business with good people, mostly sellers and a couple of, guys in St. Louis Park and, Chanhassen.
All right. Awesome. Thank you, Christian. All right. So let's go to one more. Aaron. Aaron had a question.
Yes.
Can you raise your hand?
How are you guys?
Yep.
Thanks for the info. It's been great. I just wanted to ask, I'm actually a friend of Jaime Contreras.
Oh, yeah?
I had lunch with him, and I'm in my first sort of seller finance deal, and he's mentioning the substitution of collateral. And I'm like, I'm in the middle of the deal. So I told my lawyer to hey, can you include this? And then, it's like I threw this out of left field, and he's giving me a lot of pushback on it. And I guess I've got to make the seller understand it as well. So how do you go about that to kind of have it in the contract? Do you get pushback at times quite often?
Yeah, I'm just gonna start. No, you really don't want to negotiate deal or drive the bus negotiations by attorney. You
Yes.
probably want to paper that with attorney, but the spirit of negotiation, it really has to be done by you and by the seller. You know, that's the only way. I don't have an example to share when the attorneys put a deal together. I
Oh,
I
yeah,
know
they
many
always,
examples
mess
when
it
they
up.
just kill the deal.
What?
So there's
What you need
there's
to-
a broker involved. So
That's
I
yeah.
don't think he's not that savvy. This
No,
deal fell into his lap.
these people, they have to paper the deal when a deal is done in spirit, right? That's the only way I see it can be done. That's kind of one thing I just want to share from my experience. I don't know, Rafik, you want to add onto it?
So you have to understand every single term in the note document that you send to the seller has a specific benefit to them. You say, look, Mr. Seller, if I were to sell this building, you will have a tax liability. And I don't want you to have tax liability. I want you to continue receiving interest income from me in perpetuity so you can relax and go on cruise ships and travel the world and enjoy your life. And so what I'd like to do is sometimes if this is $1 million seller financing note, I might not be able to use the entire $1 million on the next property. But if I have a substitution collateral and slice and dice clause in there, I can split it into two and I can assign it to a different collateral so that and there's a whole term which power players who are in this group know what I'm talking about. I don't remember it right now, but we live in the chat GPT world. You can always look it up. Basically, as long as your net income on the property is greater than or equal to or greater than the one you're selling, there should be no problem. As long as the value of the property you're substituting is greater than or equal to the property you're relinquishing, you basically should have no problem substituting it so that the seller is not exposed more than they were when they got the deal. And it's all done in a spirit of, goodwill, integrity, and making sure the sellers are protected. So, but it's a process. It's you got to sell it, but you also got to stand by that document, stand by it. Cool.
Understand. Thank you.
All right. All right. I think we have time for one more question. Fernando, are you here? Do you want to raise your hand so we can put you on the stage?
Yeah, I guess
Fernando.
can I just talk?
Yeah.
Okay.
Yeah. Hey, what's up, buddy?
Good. How are you? Thanks, guys, for putting this together. Rafik, what's up, man?
Hey, what's up? How you doing?
Yeah, I guess the question was when you first got started in creative financing, I guess you're going to need an attorney after you negotiate. How do you vet the attorney that would be open to after you've negotiated the deal, than just going to just any real estate attorney? How do you vet that attorney that they're good at putting a creative finance deal together?
Well, we sort of instructed the attorneys to put together those documents based on what we received from our coaching. I mean, all of these documents are available. It's so important to be like, I don't know anybody in Tampa who would do this, but you have to understand now with ChatGPT, you can basically put in all the terms and we'll spit out a really nice document. And then you ask your lawyer to verify and make sure that the document is legit. And he will approve it, right? I mean, all of this stuff we're talking about is a makes sense, and it's got to be a win-win situation for the seller. That's what you need to understand. There's no scam here. There's no taking advantage of anybody. It's providing the seller with so most of our sellers, by the way, have a distressed asset that doesn't make any money, right? And then you take that problem and you go put some paint on it, you do some marketing, you fix up the roof and whatever, and all of a sudden it turns into a cash flowing asset. And the seller benefits from receiving that cash flow, but sometimes, or most of the time, seller wants this price for the property while it's only worth this. And only in reaching the difference between what they expect and what the real value is. I mean, you can beat them up on the price and you might never get it because I'll come in, I'll offer more, but guess what? There's two conversations going on when you buy a value-add property. if you have to raise capital, right? Two conversations. One conversation with the seller when you knock on the property and you say, oh, it's a piece of shit, it doesn't make any money, it's worthless. Second conversation is with the investor, private capital partner. And to him, you tell, hey, this is an amazing property, it's an opportunity and whatever. So all I'm trying to teach you guys is that once you have a contract signed and once you met with the person, the seller and his advisors, you can, and this is a lot of EQ. It's a lot of massaging those terms and really making sure that seller feels you and trusts you. And then you basically convert it and you say, look, Mr. Seller, you obviously worked and I want your legacy with the property to be better. I want you to see how this thing is really working well, like it did 15 years ago when you were in charge. And now you live in Florida and this thing is Minnesota or in Illinois. Let me show you what it needs to be so that you can enjoy higher, dollar amount out of this and get some interest return and whatever. When you approach it with that energy, sellers be all over it. Like, who is this guy? He's not trying to take something from you. He was trying to give me something, which is cash flow, which is a better price and opportunity. And that's what it's at. That's what it's all about.
I can add to that. Just what I was thinking, Fernando, how did they do it and how we started. So I learned a lot from Rafik. Then Greg Pena is, I think, has more to it in terms of, if you're looking for templates and stuff like that. But fundamentally, you want to put a deal together with the seller, first, that it makes sense for him, makes sense for you. Then I've not necessarily used the templates that Greg shared, but I would put like one-pager memorandum of understanding. So we're understanding exactly what deal we're putting together between seller and I. And then you put that memorandum of understanding to attorneys to paper it up based on that state laws and, so make it right.
The other thing is, biggest problem we all have is lack of confidence. Am I doing this right? Am I not doing this right? And for that reason, I do coaching. We have this Zoom call once a week. There is other like Greg Pinio. There's a commercial academy, and you go and sign up to these masterminds and you will have a network of people who have all the answers. And it doesn't cost much at all, but you learn and you improve and you elevate. So I'm obviously the biggest proponent of masterminding and coaching and whatever. And I've been coached by many people, and I'm super grateful to have achieved all the success I have by virtue of having these mentors show me the way. So I'm just paying back. That's all.
All right, Fernando, did we answer?
Yeah, thank you so much. Yes, thank you.
All right, all right.
If you can sit, you said you do a call every week, Zoom call every week.
We're still debating, so actually, that's one more time plug in. I'm going to send one more survey. Julius has dropped in the comments, but in the emails, you're going to get the survey, like 7 or 10 questions. And I just want to poll, how often people do they want and what topics. But so far we did once a month.
Once a month, gotcha.
And
okay.
yeah, Rafik, you want to plug in about
what I do is I have a kind of a coaching students. And I sort of share a concept for 10 to 15 minutes, and then we talk about deals. My main interest in this is to get people to send deals so we can do deals together, and to raise capital, especially Sheriff Meadowire style. So I do that on a regular basis every week. We charge $500 a month. We sort of haven't charged anybody. It's been a free service. We're probably going to start in April. But I realize one thing, when people put something down, they're actually going to show up. Because I'm doing it free, people come and go as they please. And it's been very, everything that's free has no value. So I know one thing, I've benefited greatly from mentorship, from coaching and whatever, and I'm going to do the same. But by the time I'm done with this industry, when I'm calling it, I want to have $100 million guys. To me, I want it to be $100 million guy, owning $100 million in assets under management. And Saul actually is my first mentee, friend, student, and all of my guys are friends to give $120 million in assets under management. And I want to do that. It's exciting to me. I benefit from it. It's not a Mother Teresa type of a situation. It's not a charity. But at the same time, we all win together. We all elevate each other. And then I have guys in Florida. I have guys in Illinois and Wisconsin, and we're doing deals. We're celebrating and stuff like that. So that's what I do.
All right. All right, so we're at the hour. Let's wrap it up. I want to wrap it up with a few takeaways. So let me go around the room. I'm gonna start from Greg. Faith, Greg, what was your takeaway from this call? If you can unmute yourself, can you share with us at least one takeaway? And where are you from? Where are you from? And what your takeaway? What did you learn? All right. We actually know. I think I mispronounced. It was Ginger Faith.
Oh, yeah, they got the wrong name there. It's Steve Nice.
All right.
I don't know how that's showing up.
What's up, Steve? You're back
Hey,
from
how you doing,
Thailand,
Rafik?
huh? I loved your little getaway.
Yeah, I just got back 4 months. It was quite a ride. A little bit harder of a hard set than I wanted, but it worked. So what did I get? The importance of building the relationship with the seller. You know, really building a strong relationship there, and then you can put all the terms together if you have that relationship. You know, it all starts there.
Awesome. It's all about
All
relationship.
right. Awesome. All right. One more. Todd Brooker. Good evening. Where are you from? And what did you learn today?
Todd Drucker can teach this class 10 times over. He is my mentor.
Good evening, Todd.
So there's a ton of information here. You know, it's there's a lot of detail within everything that Rafik talks about. And certainly, Saul, you're figuring this out as well. Your ability to talk and speak with confidence with sellers has almost more to do with your success than the technical aspects of doing it. That's an interesting point. Speaking with confidence and bringing a person along in a relationship quickly is maybe a more important skill to develop than almost anything else. I've been teaching people to do this for 30 years. And, you know, when you're talking with a seller, focus much less on the deal that you're trying to structure and much more in how you can solve their problems with the deal that you bring.
Yep.
So
Amen.
much more important. And, you know, the coaching class that Rafik is talking about and offering to you folks is it's gold. It's gold because there's so much here as a broad brush, and there's so much more involved in the detail. And those details aren't minor, they're major. When I teach people all the metrics and all the financial stuff. I'm an MBA. My focus was finance. I also have another graduate degree in actuarial science. And for a lot of the folks that pay me, you know, to do this, I get paid not just as a facilitator, but as a coach. And people will come to see me and I'll teach them all the focus and all the metrics. And the reality is none of it really matters until their ass is on the line with a real deal, truth be told, right? None of it matters. And that's when it gets serious and they really learn. But here's the other point that I'll make about that. For every 10 people who will pay me a substantial amount of money to teach them the financial formulas, maybe 1 or 2 out of 10 are the finders in the way that Rafik is, knowing how to find a deal, structure a deal, add value to increase the lease payments, stabilize the building, and then oversee management. That's a finder in my mind. And then you got people who bring money who frankly would never be involved in real estate in a million years if not for the finder who is able to find the properties and do those things. And they won't invest in real estate unless they can hitch their wagon to your team. If you're going to put those things together, then you have to have both, and you have to have the capacity to talk to both groups because the conversations and the psychology are different, and you must possess the capacity to speak to both effectively. That's what I would say.
Yeah. Thank you. Thank you.
Amazing, Todd. Yeah, that was.
So one of the things I offer is I offer for all of you guys to borrow my confidence. You see, I don't do you know, I'm not gonna charge people money like 50,000, 100,000. People are like, well, can you do a VIP? One of the guys says, we do a VIP. I don't do VIP. You know why? I'm too expensive for that. But I'll partner with you on a deal and we'll make millions together. And I have multiple people in this window right now with whom I have multiple deals going on in Michigan and Chicago and Illinois I've lent money to people. And to me, it's all about meaningful relationship. And I build long-term relationships with long-term people. I tell everybody, hey, let's be friends first. And let's make sure that every single deal is so down payment on the next one. So we can grow together and empower each other to grow. And I have made a lot of millionaires so far, and I'll make more millionaires. But one thing that's my problem, I'm too nice. And I have a lot of people that are not serious. And they kind of want it, and they're not, they're here today, they're not here today. They were like commercial real estate, and they would, they want to chain, they want to blockchain tomorrow. I'm like, dude, don't screw around. You want to do something, stick to it, jump in with the full, and we will buy some buildings together. Go knock on some doors, go do some mailers, find some leads. And it's so exciting. One of the biggest things that I look forward to is when somebody with his, he's got excitement in his eyes. He got a deal, fire on the contract. Like, I got one. That's the most exciting time. Like, all right, let's go. Let's call the seller. Let's negotiate. And I live for negotiating terms. But main thing is, and that's the difference between me and some of my other mentors, is I always want to make sure that it's a fair deal for the seller. I don't want to take advantage of anybody. And I want the seller to always want to sell me the second or third building or invest with us. And that's the difference between the way I do business and many other people. And hopefully, if we keep everything honest and creative, financing is to be radical, transparent, we'll always stay out of jail and have a really good brand in the marketplace. And that's what I want everybody to do. That's what, get your ego out of the way and don't be greedy. My mentor taught me, Rafik, make sure everybody makes money, make sure everybody's happy. And yes, sometimes you do a little concession. Sometimes you pay a little more, but over a long term, you will pay back 10 times. And so I kind of subscribe to that ideology. Cool.
All right. So I think it was great. It was amazing wrap, Todd. I really appreciate it for those final thoughts. Rafik, thank you very much, brother. I think it was so much value to it. Over 100 people. I didn't expect it's going to be. I think we need to buy another license in the Zoom for next call. Thank you everyone for joining it. Everyone is going to get an email with a survey and a recording of this YouTube. Just drop your comments in that survey. What other things we need to bring next month probably. And I really appreciate it. Have a great rest of the night. And thank you guys.
All right, everybody. Thank you very much. And have a wonderful day. All right. Love you guys. Thank you.
Bye.
Thank you, Rafik.